Hello friends, this is Aniruddha Bahal from Cobrapost. Today I bring you the second part of our Lootwallahs series, a series which exposes Indian businesses. The story I'm going to share with you is sizzling hot, more sizzling than our expose on the Anil Ambani-led Reliance ADA Group a few weeks back. So tighten your seatbelts and plug in your earbuds. Watch how the financial empire of the 125-year-old Murugappa Group is put under our scrutiny. As some of you may be aware, the group's star performer is Cholamandalam Investment and Finance Company Limited, in short CIFCL, a non-banking finance company, or as they say, a name that props up every now and then on gleaming billboards across towns and cities, screaming, "Enter a better life." The promise looks hollow, however. As our investigation reveals, 4 of the Murugappa Group companies have shared upwards of rupees 10,100 crore amongst themselves. The companies involved are Cholamandalam Investment and Finance Company Limited, Cholamandalam MS General Insurance Company Limited, Chola Business Services, and Murugappa Management Services. These funds have curiously landed in the kitties of several group entities, Murugappa clan members, and key management personnel, amongst others. A classic case of robbing Peter to pay Paul. The only difference? Peter here is the banks and financial institutions, investors, and members of the public like you, ordinary folks like us. We all have put in both our money and trust to fund the spectacular growth that Cholamandalam Investment and Finance Company Limited has witnessed in recent times. First, some numbers. Cholamandalam Investment and Finance Company Limited diverted rupees 6,419 crore, Cholamandalam MS General Insurance Company Limited rupees 3,040 crores, Chola Business Services Limited rupees 4,103 crores it received from Cholamandalam Investment and Finance Company Limited, and Murugappa Management Services rupees 675 crore. Cobrapost has reviewed relevant statutory filings and other documents to collate and analyze the data. There may be mismatch between different filings. The reasons could be software glitches, human error, and unknown variables. Though the data produced here are approximations, they can vary significantly on the upper side if an audit is conducted by competent authorities. These snippets are based on our analysis of that data. Most of these funds have landed in the kitties of Murugappa Group entities, Murugappa clan members, and key management personnel. Such interrelated transfers of funds fall in the category of related party transactions as defined under the Companies Act of 2013, the Listing Obligations and Disclosure Requirements, or LODR, regulations of the Securities and Exchange Board of India (SEBI), and the Indian accounting standards set by the Indian Institute of Chartered Accountants. But before I get down to the brass tacks of analyzing how these companies indulge in such large-scale related party diversions, let me make a truly jaw-dropping revelation. The Cobrapost investigation has found mammoth cash deposits by Cholamandalam Investment and Finance Company Limited. The amount involves more than rupees 25,000 crore, which CIFCL has deposited across 14 banks since the year 2019. Here again, this finding is based on the analysis of relevant statutory filings and other documents, and the data may mismatch for reasons that I have already explained. The data produced here are approximations and can vary significantly on the upper side if an audit is conducted by competent authorities. Now, who are these banks? 8 of these banks are private entities and 6 are public sector banks. Some of the prominent banks are ICICI Bank, HDFC Bank, Axis Bank, State Bank of India and Punjab National Bank. ICICI Bank tops the list, which has received a whopping rupees 13,360 crores as cash deposits. A surprising element here is that a small finance company like FinOFinTech has received more than rupees 1,329 crore, that too in a single year. Punjab National Bank, a public sector bank, is the third highest recipient with upwards of rupees 561 crores going to it. IndusInd Bank, another private entity, has received around rupees 256 crore worth of deposits in a period of 2 years. This bank is owned by the Aniruddha Group. The scale and pattern of cash deposits reported by an NBFC like CIFCL raises important questions regarding the operation of regulatory monitoring and reporting frameworks applicable to such transactions. The manner in which large value cash transactions examined in this story are monitored, reported, and reviewed by banks and regulators, including the Reserve Bank of India, forms a key area of regulatory oversight that merits closer examination. Now let us get back to discussing how approximately rupees 10,100 crore of these funds ended up with multiple Murugappa Group entities, even as some of the prominent members of the Murugappa clan and the key management personnel lined their pockets. Curiously, the money was paid and recorded in the books as work contracts, professional fees, and commission, etc. This is what we may call creative accounting. Most of these transactions have not been disclosed, raising serious questions regarding their commercial rationale. CIFCL, the focus of our analysis, has diverted rupees 6,419 crore mostly in related party transactions. The star performer of the Murugappa Group has paid rupees 1,654 crores to over a dozen related entities and has recorded them as work contracts. Of all these, Chola Business Services Limited received more than rupees 1,628 crore through half a dozen transactions in a single calendar year, 2018-19. Among them, the beneficiary is AMM Foundation, a homegrown non-profit. Though the amount paid to the Murugappa family NGO is not big, it raises a question as to why a payout which could have been a donation was given for a work contract. Apart from paying sums worth more than rupees 1,628 crore to these 13 sister concerns, CIFCL has reportedly paid around rupees 662 crore to 5 Murugappa entities and a dozen senior Murugappa family members. The companies are Chola Business Services, Murugappa Management Services, Cholamandalam Home Finance, Net Access India and Cholamandalam Securities. They have together received about rupees 642 crore. But these payments have been reported as professional fees. Another instance of creative accounting. As mentioned, CIFCL has paid around rupees 19 crore to 12 senior Murugappa family members, but these payments have been classified as professional fee and salary. Most of these recipients are prominent members of the Murugappa clan. One such member is Arun Alagappan, who alone has received around rupees 12 crores in salary. In addition to rupees 1,628 crore, Chola Business Services has received rupees 4,103 crore from CIFCL over a decade since 2015. But CIFCL has made disclosures of only rupees 2,045 crore it has paid to this Murugappa Group private entity. Chola Business Services has paid around rupees 18 crore to Chola Business Services, to Murugappa Management Services and Venkatachalam A. Venkatachalam, who is one of the promoters, has received around rupees 16 crore in salary. Next in this expose is Cholamandalam MS General Insurance or CMGICL, another related company. This insurance company has diverted funds worth rupees 3,040 crore to 9 Murugappa Group companies. And all these transactions have been reported as payment against work contracts, commissions, and professional fees. Here again, Chola Business Services has been paid around rupees 214 crore commission. Of all these related party transactions, disclosures of only rupees 116 crore have been made. Another entity which used the same modus operandi to divert funds, Murugappa Management Services. The diversion happened in two stages. In the first, rupees 675 crore was extracted from 17 group companies listed and unlisted between 2017-18 and 2014-25. In the second stage, Murugappa Management Services made huge payouts to dozens of individuals, a slew of entities including related companies, rating agencies, sport bodies like the BCCI amongst others. The quantum of these payments is an estimated rupees 365 crore, or if you can put it the other way, 1 crore a day. Out of rupees 365 crore, the Murugappa family members and their close associates have together received rupees 353 crore. There has been no related party disclosures in this regard. You are watching Cobrapost Expose on Cholamandalam Investment and Finance Company Limited. For more details, please log in to cobrapost.com.
Cobrapost analysis of statutory filings and other documents has revealed that Cholamandalam Investment and Finance Company Limited has made cash deposits a scale which is not only enormous but also buffeting. The Murugappa Group flagship has deposited around 25,089 crore rupees across 14 banks between 2019 and 2025. Of these banks, 8 are private entities and 6 are public sector banks. The cash deposits were made over a period of 7 years. According to our analysis, ICICI Bank Ltd tops the list of all the recipients of cash deposits. The bank has received around 13,360 crore rupees in deposits in a period of 7 years. State Bank India follows with deposits of 4,607.45 crore rupees. Punjab National Bank, another public sector bank, is the fourth highest recipient of cash deposits with an upward of 561 crore rupees. IndusInd Bank, another private bank which is owned by the Hinduja Group, has also received around 256 crore rupees in cash deposits in a period of 2 years between 2019 to 2020. A small finance company like Fintech has received more than 1,329 crore rupees in cash deposits, that too in a single year. The banks which have received 25,089 crore rupees in cash deposits from Cholamandalam Investment and Finance Company Limited are Axis Bank, which received 391.64 crore rupees in cash deposits over a period of 4 years. Fintech, which received 1,329.66 crore rupees in cash deposits in 2024 to 2025. HDFC Bank Limited, which received 597.71 crore rupees over a period of 6 years. ICICI Bank Limited, which received 13,360.73 crore rupees over a period of 7 years. State Bank of India, 4,607.45 crore rupees over a period of 6 years. The Federal Bank, which received 1,046.73 crore rupees in cash deposits over a period of 7 years. Karur Vyasya Bank, which received 2,846.45 crore rupees in cash deposits over a period of 7 years. Bank of Baroda, which received 38.87 crore rupees in cash deposits over a period of 4 years. Andhra Bank, which received 4.45 crore rupees in cash deposits over a period of 2 years. IndusInd Bank, which received 256 crore rupees in cash deposits over a period of 2 years. Punjab National Bank, which received around 561 crore rupees in cash deposits over a period of 3 years. Yes Bank, which received 35.70 crore rupees in cash deposits over a period of 2 years. Oriental Bank of Commerce, which received 3.63 crore rupees in cash deposits over a period of 1 year. Union Bank of India, which received 9.51 crore rupees in cash deposits over a period of 1 year. According to our investigation, Cholamandalam Investment and Finance Company Limited, Cholamandalam MS General Insurance Company Limited, and other Murugappa Group companies have diverted more than 10,262 crore rupees over the past 7 years or so. These funds were disbursed further down to scores of individuals and entities, which include several Murugappa Group companies, Murugappa clan members, and key management personnel, among others. The cash deposits made by a non-banking finance company raise a serious question about regulatory failure on the part of government agencies. It is worth noting that all banks are supposed to flag suspicious transactions such as these by filing an STR with FIUNT within 7 days of concluding the transactions. FIUNT was set up after the Prevention of Money Laundering Act (PMLA) came into force in 2002. This unit operates directly under the Union Finance Minister. The RBI, too, has failed spectacularly discharging its monitoring responsibility as a statutory watchdog. It is worth mentioning that Section 26090 of the Income Tax Act 1961 makes it mandatory for each entity to disclose in their tax audit report the identity of each person and PAN details if receipts in excess of 20,000 rupees in cash are made in any financial year. While making cash deposits of 25,089 crore rupees with these banks, Cholamandalam Investment and Finance Company has failed in this mandatory compliance. The company did not provide the identity of a large number of customers while making such cash deposits. Considering the quantum of cash deposits, a potential money laundering may not be ruled out. Cobrapost has also analyzed cash deposits made by Cholamandalam Investment and Finance Company with Axis Bank. The manner in which the cash deposits were made makes an interesting case study. Cholamandalam Investment and Finance Company deposited cash worth 7,297.14 crore rupees with Axis Bank over a period of 7 years between 2019 to 20 and 2024 to 25. These cash deposits were made using a mix of modes: cash management services, CMAs, cash deposits by individuals, and cash deposits directly with the branch. Axis Bank received cash deposits of 3,216 rupees and 92 paise through CMAs, 4.10 crore rupees through individuals, and 4,076 rupees and 12 paise directly at its branches. It is apparent that involvement of individuals in cash deposits is negligible. Analysis suggests that cash deposits made by CIFCL through CMAs in its account saw steady volumes for 2 consecutive years, 929.04 crore rupees in 2019 to 20 and 702.53 crore rupees in 2020-21. Then, they gradually reduced but not diminished. Similarly, cash deposits made by bank branches saw steady volumes for 3 consecutive years, 1,539.11 crore rupees in 2019 to 20, 1,421.97 crore rupees in 2020-21, and 788.83 crore rupees in 2021-22. Though cash deposits made by individuals was not substantial, it saw a steady increase except in 2024-25. The total cash deposits CIFCL made with Axis Bank stood at 7,297.14 crore rupees in 2024-25. It is a standard practice that the debt servicing is conducted by all banking and lending institutions through structured equated monthly installments, EMIs, debited straight away from the account of a borrower. An electronic clearing system mandate is obtained from the borrower before a loan agreement is executed and the loan is disbursed. Then there are digital forms of payment as well. It is only when a customer defaults on the payment of EMIs through this procedure or fails digital servicing, the lenders seek remittances against defaulted payments, EMIs in cash through their staff members or collection agents against. It is highly unlikely that such huge cash deposits are being made by borrowers. Or the quality of borrowers is poor. In all fairness, the involvement of such massive cash deposits is questionable. This requires scrutiny by regulatory watchdogs like the Reserve Bank India and investigating agencies. The lack of complete transparency with regard to the identity of depositors making remittances in large amounts of cash smacks of potential money laundering activities and needs to be investigated under the Prevention of Money Laundering Act. You are watching the Lootwallahs to a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Heijen and may contain inadvertent errors and inconsistencies, despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. It is not only Cholamandalam MS General Insurance Company Limited which has used creative accounting to divert funds to related parties. Cobrapost investigation has found yet another instance of creative accounting which Cholamandalam Investment and Finance Company Limited has used to divert funds. The flagship of the 125-year-old Murugappa Group has used professional fee to divert sums amounting to 662.65 crore rupees to 5 related entities and a dozen Murugappa clan members. But the company has failed to make disclosures about these related party transactions. This is a blatant violation of the disclosure requirements as underlined by the Companies Act of 2013, SEBI's Law to Regulations, and the Indian Accounting Standards. As our analysis shows, the NBFC has paid 5 of the Murugappa Group companies more than 642.95 crore rupees in professional fee. The name of the recipient companies are Chola Business Services, Murugappa Management Services, Net Access India Limited, Cholamandalam Home Finance Limited, Cholamandalam Securities Limited. Top in the list in terms of the quantum of funds diverted to, Chola Business Services alone has received a whopping sum of 430.51 crore rupees in professional fee. Murugappa Management Services, on the other hand, has received 138.28 crore rupees in professional fee from Cholamandalam Investment and Finance Company Limited in 2015-16 and 2021-22 through 8 transactions. The last 2 transactions took place in 2021-22. Interestingly, Murugappa Management Services has also been used as a special purpose vehicle for fund diversions. This will be discussed in a separate video. Even as Cholamandalam Investment and Finance Company Limited ingratiated the above-named 5 related entities with an upward of 642.95 crore rupees. The company has paid 19.70 crore rupees to 12 individuals in professional fee and salary. Most of these recipients are prominent members of the Murugappa clan. The names of these clan members are all these members have together received 19.70 crore rupees in professional fee or salary at various intervening years between 2017-18 and 2024-25. As our analysis suggests, Arun Alakpan, Wellness, Arun Venkatachalam, M.M. Murugappan, M.A.M. Arunachalam, M. Arunachalam, and Valli Arunachalam have received largest sums. Arun Alakpan, who is chairman of the Murugappa Group, is the top grosser receiving 12.50 crore rupees in salary between 2017-18 and 2021-22. He is followed by Wellness and Subbiya S., who received more than 2.25 crore rupees and 1.03 crore rupees respectively. Arunachalam Nathesan, as an exception, has received 22,58,683 rupees in foreign exchange. Though these related entities and individuals together received more than 662.65 crore rupees in a span of 6 years, there has been no related party disclosures by Cholamandalam Investment and Finance Company Limited. The company has thus violated the provisions of the Companies Act, SEBI's Law to Regulations, and Indian Accounting Standards. Apparently, all these payments camouflaged under the cloak of professional fee or salary are an exercise in fund diversion. Had it not been the case, Cholamandalam Investment and Finance Company Limited would have made disclosures of all these RPTs before the regulatory agencies. This is despite the company having its own policy on related party transactions. There is another important revelation which again makes these transactions questionable. The Murugappa family members who are recipients of these funds are either on the payroll of or are consultant to Cholamandalam Investment and Finance Company Limited. All these transactions show that corporate governance has been thrown down in the dumps. This goes without saying that these diversions have been effected in utter disregard of the interest of lenders, investors, general investing public. The non-compliance of disclosure requirements as obligated by the 2013 Companies Act, Bharatiya Nyaya Sanhita, and load regulations framed under the SCBI Act is a gross violation of all these laws. All the companies and the key management personnel are, therefore, liable to be prosecuted for falsifying accounts and concealing related party transactions under various provisions of these laws. You are watching the Lootwallahs 2, a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Heijen and may contain inadvertent errors and inconsistencies despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. As revealed in the beginning of this expose, two of the 125-year-old Murugappa Group companies have diverted 10,134 crore rupees to related parties. These are Cholamandalam Investment and Finance Company Limited and Cholamandalam MS General Insurance Company Limited. This amount includes 3,040 crore rupees diverted by Cholamandalam MS General Insurance Company Limited in work contracts, commission, and professional fee to 9 Murugappa Group companies. Cobrapost analysis suggests Investment and Finance Company Limited too has diverted funds worth more than 1,654 crore rupees to over a dozen Murugappa Group entities. Curiously, these funds were diverted by awarding work contracts to the beneficiary companies. After analyzing all these related party transactions, Cobrapost has found the following elements characterizing them. 1. Cholamandalam Investment and Finance Company Limited has awarded work contracts to a dozen Murugappa Group entities and paid them off sums worth more than 1,654.11 crore rupees. 2. Of all these entities, Chola Business Services turns out to be the highest grosser, receiving 1,628.36 crore rupees in work contracts. 3. Parry Enterprises India Limited is second on the list, having received 16.94 crore rupees in a similar manner. 4. Cholamandalam Home Finance and Cholamandalam MS General Insurance Co. Limited, the most unlikely candidates, too have received huge payments against work contracts. 5. The NBFC has not made any disclosures about these RPTs. CIFCL has paid 13 Murugappa Group entities more than 1,654 crore rupees at various periods of time between 2015 to 16 and 2024 to 25. The company-wise details of these related party transactions are as follows. Parry India Limited received 1.31 crore rupees. Parry Enterprises India Limited received 16.94 crore rupees. Murugappa Management Services received 15.78 lakh rupees. Coromandel Engineering Co. Limited received 3.66 crore rupees. AMM Foundation received 19,364 rupees. Cholamandalam Distribution Services received 3.90 lakh rupees. Cholamandalam Home Finance Limited received 73.92 lakh rupees. Cholamandalam Securities Limited received 2.44 lakh rupees. Cholamandalam MS Risk Services Limited received 60,000 rupees. Cholamandalam MS General Insurance Company Limited received 2.70 lakh rupees. Net Access India Limited received 2.36 crore rupees. Chola Business Services Limited received 1,628.36 crore rupees. PaySwift Technologies Private Limited received 46.62 lakh rupees. Chola Business Services Limited received more than 1,628 crore rupees as already mentioned. The company received this massive payout through half a dozen transactions in a single year, 2018 to 19. Among the other beneficiaries is AMM Foundation, a homegrown non-profit. Though the amount paid to the Murugappa family NGO is not big, it raises a question as to why a payout which could have been a donation was given for a work contract for a sum as paltry as 19,364 rupees. Although all these were related party transactions, Cholamandalam Investment and Finance Company Limited chose not to make any regulatory disclosures, which makes all these transactions suspicious. It was only from FY 2022-23 that Cholamandalam Investment and Finance Company Limited selectively made related party disclosures. Holding back or concealing information on related party transactions is violation of various provisions of the Companies Act of 2013, SEBI's Lootwallahs regulations, and Indian accounting standards. According to Section 447 of the Companies Act, concealment and falsifying accounts constitutes a and qualifies for criminal prosecution under various provisions of BNS as well. Section 447 of the Companies Act and various BNS provisions such as Sections 316, 344, 197 and 212 stipulate jail terms of varying time and monetary fines. SEBI may also invoke its powers provided in SEBI Act to initiate criminal proceedings in a court of law against CIFCL's key management personnel. You are watching the Lootwallahs to a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Hagen and may contain inadvertent errors and inconsistencies, despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. Next in this Cobrapost expose the Lootwallahs too, we tell you how Cholamandalam Investment and Finance Company Limited diverted funds worth more than 4,103 crore rupees to Chola Business Services Limited. This privately held company of the Murugappa Group is a special purpose vehicle which has been used for the express purpose of diversion of funds. Chola Business Services also works as staff recruiter for Cholamandalam Investment and Finance Company Limited. This private entity of the Murugappa Group has also received 1,628.36 crore rupees in work contracts. Before we proceed to provide a detailed account of our investigation, we would like to give you a heads up about the findings of our investigation. Chola Business Services works as manpower supplier for Cholamandalam Investment and Finance Company Limited. It received 4,103 crore rupees in diverted funds from Cholamandalam Investment and Finance Company Limited between 2015 and 2025. Cholamandalam Investment and Finance Company Limited has disclosed only 2,045 crore rupees of these related party transactions that took place between 2022 and 2025. The non-disclosure of 2,058 rupees core diverted by Cholamandalam Investment and Finance Company Limited is violation of regulatory guidelines laid down by the Companies Act, SEBI's Lootwallahs regulations, and the Indian accounting standards. Chola Business Services has made some questionable disbursals further down. The beneficiaries are Mysore Club, Murugappa Management Services and Venkatachalam, one of Murugappa clan members and promoters of the Murugappa Group. Venkatachalam has been paid salary worth 16.50 crore rupees between 2023 and 2025. The company has also reportedly received 214.80 crore rupees from Cholamandalam MS General Insurance in professional fee and work contracts as discussed elsewhere in the story. It is worthwhile to note that Chola Business Services has claimed 180 crore rupees between 2018 and 2025 in deduction under Section 80JJ of the Income Tax Act for additional hiring of irregular fake employees with CIFCL. Before we get into the details, let us throw some light on how Cholamandalam Investment and Finance Company Limited and Chola Business Services are related parties. Both companies are controlled by the Murugappa Group through Ambani Investments Limited and Cholamandalam Financial Holdings Limited. But the shareholding pattern is not that simple. Ambani Investments Limited owns these companies through various cross-holdings. On the surface, Chola Business Services is owned by Chola Insurance Distribution Services, Karthik Investments Private Limited, Ambani Investments Limited, and Ambani Enterprises Private Limited. The four Murugappa Group entities, respectively, hold 47.99%, 19%, and 13.99% shareholding in Chola Business Services. Chola Insurance Distribution Services, however, has Ambani Investments Limited as its majority shareholder with 50% stake. While Karthik Investments Trust and Cholamandalam Investment and Finance Company Limited, respectively, hold 19% and 12% shareholding in Chola Insurance Distribution, Chola Business Services holds 19% stake in the company. Ambani Investments Limited owns Cholamandalam Investment and Finance Company Limited through another set of cross-holdings. Cholamandalam Financial Holdings Limited owns a majority shareholding of 44.33% in Cholamandalam Investment and Finance Company Limited, where Ambani Investments Limited owns 4.01% stake. Interestingly, Cholamandalam Financial Holdings is a non-deposit systematically important core investment company, and Ambani Investments Limited has 37.69% of the total 46.42% shareholding that the group owns in it. By virtue of these cross-holdings, both Cholamandalam Investment and Finance Company Limited and Chola Business Services Limited are related parties. As mentioned in the beginning, Chola Business Services Limited has received 4,103 crore rupees as a result of diversion of funds that Cholamandalam Investment and Finance Company Limited has been orchestrating. We have catalogued these diversions since 2015 till 2025. The company has made disclosures only for the fund transfers that took place totaling 2,045 crore rupees between 2023 and 2025. The non-disclosure of the rest of the related party transactions amounting to 2,058 crore rupees is violation of the Companies Act of 2013, SEBI's load regulations, and the Indian accounting standards. It is interesting to note that funds diverted to Chola Business Services have further been utilized in a questionable manner. The beneficiaries of this diversion further down are Murugappa Management Services and Venkatachalam, one of the promoters of the Murugappa Group. Venkatachalam has been paid sums worth 16.50 crore rupees in salary, 4.36 crore rupees, 6.32 crore rupees, and 5.82 crore rupees, respectively, in 2023, 2024, and 2025. Murugappa Management Services, a Murugappa Group company, has received 3.05 crore rupees from Chola Business Services. Curiously, one surprising beneficiary of this fund diversion is Mysore Race Club. The 57-year-old equestrian sports body was paid 10 lakh rupees in 2020. It is a clear misuse of public funds for personal entertainment. A breakdown of the funds diverted further down by Chola Business Services is as follows. Cholamandalam Investment and Finance Company Limited may have made partial disclosures about funds it has diverted to Chola Business Services. The question remains, did they follow the due process as outlined in their own in-house policy on related party transactions? The policy requires prior approval of the audit committee and shareholders of the company for any related party transactions. It is important to mention 3 clauses here. Clause 7 of the policy outlines the guidelines for determining the arm's length basis of transactions. Clause 9 lays down the review procedure when an unapproved related party transaction has taken place. Clause 10 is about the need of making mandatory disclosures about RPTs. Clause 10 states, The company shall make necessary disclosures as per the requirements under the Companies Act, SEBI load regulations and Indian accounting standards, as the case may be within the prescribed timelines. Apparently, Cholamandalam Investment and Finance Company Limited has not followed its policy in letter and spirit. Even if they had sought approval for these transactions, it does not absolve the promoters, non-executive directors of Cholamandalam Investment and Finance Company Limited and Chola Business Services of their involvement in the violation of the 2013 Companies Act and other statutory guidelines such as SEBI's load regulations and the Indian accounting standards. Apart from these related party transactions and questionable payments that Chola Business Services has made, the company has claimed a large deduction under Section 80JJ of the Income Tax Act, 1961. It is worthwhile to note that Chola Business Services claims to be providing manpower services to Cholamandalam Investment and Finance Company Limited, and these deductions have been made against those services which could have been availed by Cholamandalam Investment and Finance Company Limited had it recruited the staff directly rather than routing it through Chola Business Services, thereby benefiting the promoter-controlled entity. Had the manpower supposedly deployed been legitimate, Cholamandalam Investment and Finance Company Limited should have claimed the deduction instead of Chola Business Services. It could have made the company and its shareholders, as corollary, richer by 4,301 crore rupees. This also raises a significant question. Why Cholamandalam Investment and Finance Company Limited chose to acquire the services of a related private entity in the first place? Why didn't the listed entity go for a competitive bidding for manpower supply? Analysis of the records of Chola Business Services shows that the Murugappa Group entity is utilizing a large amount of funds towards the manpower cost and claiming tax deduction thereof. The company has claimed 180.79 crore rupees in deductions under Section 80JJ of the Income Tax Act between 2018-19 and 2024-25. However, there has been no tax deduction for payments made against services rendered by Chola Business Services in the past 3 years starting mid-FY 2022-23. The potential tax liability on account of these deductions is estimated at 50 crore rupees plus interest applicable. The company has thus caused as much loss to the state exchequer in terms of tax revenue. Our analysis further suggests that the claims of the manpower deployed by Chola Business Services to Cholamandalam Investment and Finance Company Limited are as bogus as the deductions are. These irregular, fictitious employees are getting salaries after each yearly interval. Also, the remuneration paid to the manpower is almost at par with minimum wages and appears to be unskilled. In addition, there is a wide variation in salaries paid to employees from 44 crore 75 lakhs 42,444 rupees to 2022-21 to 2 crores 9 lakhs 26,142 rupees in 2021-22 to 36 crore 66 lakhs 75,296 rupees in 2022-23. And finally to 89 crores 45 lakhs 54,025 rupees, more than double, in 2023-24. Furthermore, Chola Business Services has also received a whopping sum of 430.51 crore rupees by Cholamandalam Investment and Finance Company Limited in professional fee. But Cholamandalam Investment and Finance Company Limited has been hiding all these related party transactions up to FY 2021-22 to deceive the investors and shareholders. The company has in the process violated the mandatory regulatory requirements of making full disclosures about related party transactions. You are watching the Lootwallahs to a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Heijen and may contain inadvertent errors and inconsistencies despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. as part of the investigation. Cobrapost also examined if charges against loans had been registered with the Registrar of Companies by borrowers of Cholamandalam Investment and Finance Company Limited. This exercise was necessary to ascertain if both the lender and the borrower companies had complied with this regulatory requirement. Cobrapost analysis cataloging 38 borrower companies has found that most of them have failed in this respect. These 38 entities have together paid 81 crores 96 lakhs 19,346 rupees in interest against the loans between 2015 to 16 and 2024 to 25. Only a few of them have filed charge register declaring their outstanding debts. Before we delve into our analysis, let us throw some light on what is a charge register, why it is mandatory, and what constitutes its contravention. A charge register is a statutory filing which provides details of financial liabilities including mortgages made against loans availed of by a company. The mortgage may consist in assets like an immovable property, share and other instruments used as a collateral. It is mandatory for companies to file a charge register under Section 77 of the Companies Act of 2013 along with its balance sheet and annual statement to inform on who has a claim or priority rights over its assets in case of default and liquidation. This charge register has to be filed with the Registrar of Companies within 30 days of charge being created against a loan facility. The obligations of both the borrower company and the lender charge holder have been clearly defined by the Ministry of Corporate Affairs in the Companies Registration of Charges Rules 2014 issued wide its notification dated 31st March 2014. Proviso of Rule 3 outlining the registration or creation or modification of charge reads, for registration of charge as provided in subsection 1 of Section 77, Section 78, Section 79, the particulars of the charge together with a copy of instrument, if any, creating or modifying the charge in Form No. CHG 1 for other than debentures or Form No. CHG 9 for debentures, as the case may be, duly signed by the company and the charge holder, or shall be filed with the registrar within a period of 30 days of the date of creation or modification of charge along with the fee. In case of non-compliance on the part of the borrower company, the lender charge holder can register the charge against the loan with the Registrar of Companies and also can claim any fee paid for the same from the borrower company. We have detailed the 38 borrower companies, the outstanding loans some of them have showing in their books, the amount of interest they paid over the past 3 years largely to CIFCL. Together, these companies have paid 67 crores 66 lakhs 47,043 rupees in interest in the past 3 years. Most of these companies have failed to create charge against the loans, and those which filed charge have not provided complete details of their outstanding liabilities to CIFCL. Out of the 38 companies we have analyzed, only 3 companies have created charge against the loans they have availed from CIFCL. These are JICA Automobiles and Finance Private Limited, Tips 1 Private Limited, and Shivani Locks Private Limited. We have also found a typical case where charge against a loan has been filed by a third party, though related. Ashlar Education Consultants PVT Limited, a Noida-based publishing company, has been advanced a loan of 682.81 lakh rupees from CIFCL. But the charge against this loan has been filed by Sapphire Cover Makers, a Ashlar Group subsidiary. Among these borrower entities, 4 companies have registering of charge against the loans availed by them is still pending. These are Zetwork Manufacturing Businesses, Abhiyan Dealcom, Avium India Housing Finance, and Apollo Green Energy Limited. This is what their financial statements tell us. There's a very noticeable oddity involving the disbursal of loans to DCC Infotech by CIFCL. In this particular instance, CIFCL has extended the loan not as a regular loan but as a channel finance. In banking parlance, channel finance is a kind of special arrangement for providing funds to associates, agents, and alike by a lending company. DCC Infotech owes 787.26 lakh rupees in loans against which the company has paid 1 crore 8 lakhs 34,177 rupees in interest to CIFCL in the last 2 years, 2023 to 24 and 2024 to 25. But no charge has been filed. Here we sum up the findings of our analysis. 1. Service Lee Technologies. This company has paid 3 crores 45 lakhs 96,998 rupees in interest. Though it has reported unsecured loans in its balance sheet, it has not provided lender-wise loan details. Smart Paddle Technology. Its 2023 balance sheet shows that all loans are secured but charges have not been filed against them. Lender-wise details have not been provided. It is likely that CIFCL has provided a bill discounting facility, a kind of loan lent directly to the agent. The company has paid 5 crores 55 lakhs 63,595 rupees in interest. JICA Automobiles and Finance. The company has paid an interest of 3 crores 69 lakhs 88,191 rupees and has also filed charge against loans. Medicare Limited. This company has received an unsecured loan of 17.49 crore rupees from CIFCL and Progfin PVT Limited, against which it has paid an interest of 1 crore 70 lakhs 88,756 rupees. But there are no lender-wise details available in the balance sheet. No charges has been registered with the Registrar of Companies. Saleagri Commodities Limited. The balance sheet reports an unsecured loan but no lender-wise details are available. It has paid an interest of 2 crores 84 lakhs 98,485 rupees. Tips 1 Private Limited. There is a vehicle loan in the name of Indian Public School Private Limited, against which 3 crores 29 lakhs 91,009 rupees has been paid in interest. Charge has also been created. Zetwork Manufacturing Businesses. Charge creation pending for the loan against which the company has paid an interest of 5 crores 53 lakhs 23,076 rupees. IPEC India Private Limited. The balance sheet for the year 2023 to 24 shows an outstanding loan of 1 crore rupees, but other details are missing. The company has paid 94 lakhs 772 rupees in interest in the financial year of 2024 to 25. Abhiyan Dealcom. The company has paid 2 crores 18 lakhs 54,424 rupees in interest against the loan it has availed. But charge creation is pending. Indian Terrain Fashions Limited. Though the company has paid 3 crores 80 lakhs 55,152 rupees in interest in the past 3 fiscal years, its balance sheet shows no loan from CIFCL. Amit India Nameplates. There is no mention if the loan is secured or unsecured in the financial statement of the company. It has paid an interest of 1 crore 56 lakhs 93,264 rupees in the past 2 fiscal years. AVM India Housing Finance. It has paid 3 crores 8 lakhs 81,532 rupees in interest against the loan in the past 3 fiscal years. Charge creation against the loan is still pending. Bhandari Automobiles. Strangely, the financial statement does not record any loan from CIFCL, though the company has paid 1 crore 46 lakhs 65,310 rupees in interest in the past 3 years. TCC Infotech. This company has received an unsecured channel finance facility, a kind of loan extended to an agent instead of the real borrower, from CIFCL. It has an outstanding loan of 787.26 lakh rupees, against which it has paid 1 crore 8 lakhs 34,177 rupees in the past 2 fiscal years. Apollo Green Energy Limited. Charge creation against the loan it has received from CIFCL is still pending. The company has paid an interest of 1 crore 42 lakhs 31,404 rupees in the last 2 financial years. Shivani Locks. This company has 2 sets of outstanding loans against which it has paid 1 crore 59 lakhs 72,709 rupees in interest. One loan worth 2.95 crore rupees has been availed with the director's property as security. The other loan of 2.34 crore rupees is against vehicles. But the company has created partial charge against loans of 45 lakh rupees and 72 lakh rupees, respectively. Post Metal Industries. The balance sheet has reported a long-term unsecured loan of 590.67 lakh rupees against which the company has paid an interest of 2,23,72,176 rupees in the past 3 years. Details about lenders missing. Kalasithi Agro. The financial statement does not report any loan from CIFCL. Though a loan has been reported, other details are missing. The company has paid an interest of 1,53,99,505 rupees in the past 3 years. 19. Ananda Dairy Limited. The balance sheet does not report any loan from CIFCL. Though the company has reportedly paid 2,15,75,865 rupees in interest. 20. Nippon Builders and Developers. The company has provided details of the interest it has paid against the loan in the past 3 years, which stands at 1,43,46,388 rupees. The balance sheet, however, does not provide details about the lenders. 21. Ashland Education Consultants. The company has reported a loan of 682.81 lakh rupees against which it has paid an interest of 81,84,957 rupees in the past 2 years. According to the balance sheet, the loan has been secured against property owned by Ashal Group subsidiary Sapphire Cover Makers. Charge has also been filed by Sapphire Cover Makers. Neelkant Infra Mining Limited. The loan is against vehicle as per page 97 of the balance sheet, and the company has paid 97,81,148 rupees in interest. No details about the lenders provided. Wheel Flexible Packaging. The balance sheet shows an unsecured loan of 9 crore rupees against an interest of 1,40,71,852 rupees in the past 3 years. But there are no lender-wise details available. Apollo Microsystems Limited. The company does not have any debt according to its balance sheet but has 71,12,654 crore rupees in interest in the past 2 years. Signet Industries Limited. This company has availed an unsecured purchase invoice discounting facility, a kind of short-term working capital, from Cholamandalam Investment and Finance Company Limited. This facility of 10 crore rupees was provided at the Chola reference rate, 5.28% P.A, against which Signet Industries has paid an interest of 1,65,23,466 rupees over the last 2 years. There is no outstanding against the facility as on 31st March 2025. The company had provided the lender post-dated checks worth 403.69 lakh rupees against this facility. Lien marked was also provided to Cholamandalam Investment and Finance Company Ltd on a fixed deposit of 1.50 crore rupees. Sanjay Chemicals India. No lender details have been provided in the balance sheet for a vehicle loan against which the company has paid 1,92,96,082 rupees in interest. No charge has yet been registered for this loan. Manikaran International. According to the balance sheet, the company has availed a secured loan of 864.58 lakh rupees against which 21,72,296 rupees has been paid in interest in the past 3 years. No charge has been filed by the company. Transtech Infoways. There is an unsecured loan of 14 crore rupees recorded in the balance sheet, but there are no lender-wise details available. An interest of 1,59,56,437 rupees has been paid against the loan in the past 3 years. Sri Sakha Developers. The balance sheet shows a secured loan of 456.97 lakh rupees against which 56,05,858 rupees has been paid in interest in the past 2 financial years. No charge has been filed. Ma Kodargadi Steels. The company has availed an unsecured loan of 50 lakh rupees from CIFCL against which it has paid 71,29,551 rupees in interest. There is an outstanding loan of 43.32 lakh rupees. Ravi Surya Developers. It has availed a secured loan against which 1,11,51,550 rupees has been paid in interest. But the company has not filed any charge against the loan. There is an outstanding debt of 413.87 lakh rupees. Logica Infoway Limited. The company has provided no details with regard to the new loan it has availed in its balance sheet as on 31st March 2024. 46,14,928 rupees has reportedly been paid in interest. Arvind Motors. There are no lender-wise loan details available in the balance sheet of the company. It has availed an unsecured loan of 151.25 lakh rupees against which the company has paid 69,89,778 rupees in interest the last fiscal year. Micro Protect Eng Equipment. The company has availed a secured loan against which it has paid an interest of 55,75,760 rupees. But no charge has been filed by it. Lupin Gases. It has availed both secured and unsecured loans which are still outstanding. The secured loan of 478.67 lakh rupees has a director property mortgaged against it. A loan of 31.93 lakh rupees stand as unsecured. The company has paid an interest of 98,67,149 rupees in the last 3 fiscal years. Paramount Marketing. Strangely, the company has not recorded any loan in its balance sheet it has availed from CIFCL, though it has made 1,42,33,182 rupees in interest payments in the last 3 years. Woodland Aero Club. Its balance sheet does not have any lender-wise loan details. There's an unsecured loan of 43.85 lakh rupees, though, against which the company has made payments of 76,61,281 rupees in interest. Vikas Air Solutions. The company has shown no loan from any financial institution but only a limit from a bank. It has paid 43,86,326 rupees in interest last year according to the balance sheet. The non-filing of charge by 35 of these companies and non-registering of charges by CIFCL as charge holder with the registrar of companies as required by law makes the CIFCL's loan disbursal practice questionable. Maybe there are many more companies which have availed loans from CIFCL but have failed in such mandatory compliance. Their number and quantum of loans they have received can be ascertained only by an investigating agency. You are watching Lootwallahs 2, a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Heijen and may contain inadvertent errors and inconsistencies, despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. As already mentioned, Cholamandalam Investment and Finance Company Limited has together with Cholamandalam MS General Insurance Company Limited diverted 10,262 crore rupees to dozens of related companies, family members and key management personnel (KMP), among other entities. Our analysis has identified dozens of work contracts involving 21 entities other than Murugappa Group companies. These entities have received funds from the non-banking finance company. However, these entities are not commercial. Together, these 21 entities have been paid more than 20.94 crore rupees through 32 transactions. These transactions took place between 2016 to 17 and 2024 to 25, ranging from as little as 1 lakh rupees to as high as 7 crore rupees. These entities include religious non-profits like the Anju Manemayathe Islam and Bhagwan Yogamurthy Shri Mahaperiyava Amit Trust, sports bodies like Bridge Federation of India, Madras Riding School, Chennai Advocates Cricket Association, Madras School of Equitation Trust, and Tamil Nadu Tennis Association, educational bodies like National STEM Education Foundation and a Lakshmi Achi Educational and Charitable Trust. Trade bodies like Federation of Automobile Dealers Association, Raipur, Automobile Dealers Association, and Indian Association of Secretaries and Administrative Professionals, cultural bodies like Dakshin Chini Prabasi Cultural Association, Prabasi Odia Cultural Society, and Isha Utsava. Other non-profit recipients are Shri Meenakshi Charitable Trust, the Doon School Old Boys Society, the Little Theatre Trust, Manbendra Smarne Trust, and Rotary Club of Madras. These entities have together received sums worth more than 20.94 crore rupees. A highlight of these transactions resulting in questionable diversion of funds is the payment of 7 crore rupees to Isha Utsav. This amount was paid in 2 tranches. Interestingly, Isha Utsav is an annual carnival held by the Isha Foundation owned by spiritual Guru Jaggi Vasudev. Another transaction of interest is the payout made to a trade body consisting of automobile traders or dealers. Cholamandalam Investment and Finance Company Limited has paid a handsome amount of 1.75 crore rupees to Raipur Automobile Dealers Association, a Chhattisgarh-based trade body, in 2022-23. Another trade body is Federation of Automobile Dealers Association, which also has received 36.50 lakh rupees. This Delhi-based trade body was established in 1964 and has 15,000 dealers as its members. Since the bulk business of Cholamandalam Investment and Finance Company Limited comes from financing automobile sale, there is a potential conflict of interest here. These apparent donations have been cloaked as work contracts, which makes all these transactions questionable even if the Murugappas had the intention to play philanthropist. The question is, why should they donate in this manner, and that too out of the money diverted by Cholamandalam Investment and Finance Company Limited from borrowed funds? It is surprising to note that Isha Foundation and Isha Leadership Academy are also among the beneficiaries. These two entities have together received 1.99 crore rupees in professional fee from Cholamandalam Investment and Finance Company Limited between 2016-17 and 2024-25. It is anybody's guess as to what professional services a non-profit spiritual outfit might have rendered to an NBFC to warrant such payouts in fee. It is pertinent to note here that CIFCL has been paying the non-profits in the form of work contract and professional fee instead of donations. This is in contravention of Section 135 of the Companies Act governing corporate donations, known as Corporate Social Responsibility (CSR) law. According to the CSR law, a company with a net worth of 500 crore rupees or a turnover of 1000 crore rupees is eligible to make donations only up to 3% of its average profit for the 3 preceding years. Before making donations, a company has to frame a CSR policy. This policy will spell out the activities it would undertake or support. The company will set up a CSR committee with at least 3 directors and 1 independent director. The Oversight Committee has to seek approval of the board for funds to be used under the CSR policy. The manner in which CIFCL has paid all these entities makes it clear that the company went to lengths to circumvent the cumbersome process that donations are supposed to follow. You are watching the Lootwallahs to a Cobrapost expose on Cholamandalam Investment and Finance Company Limited. For more details, please log into cobrapost.com. This video was automatically generated by an artificial intelligence system using Hagen and may contain inadvertent errors and inconsistencies, despite our best efforts at accuracy and quality. We recommend that you peruse and verify the information in this video with the corresponding published story on cobrapost.com. It will be in order to measure how much the investors have lost in terms of dividend they should have earned had there been no diversion of funds. We analyze the pattern of dividend paid to the promoters of 7 of the Murugappa Group companies: Cholamandalam Investment and Finance Company Limited, Eid Parry Limited, Coromandel International Limited, Tube Investments of India Limited, Carborundum Universal Limited, Went India Limited, and Shanti Gears Limited. Among these companies, CIFCL is the second highest dividend payer after Coromandel International Limited. The 2 Murugappa Group companies have paid 648 crore rupees and 1,554 crore rupees, respectively, to their promoters. CIFCL has paid 648 crore rupees in dividend to its promoters over the past 9 years between 2017 and 2025. Though the holding of the promoters has dwindled all along these years from 53.08% to 49.92%. It is interesting to note that the number of shares have increased almost 7 times, from 15 crore 62 lakhs 77,533 in 2017 to 84 crores 9 lakhs 40,905 in 2025. While the dividend paid per share saw a decrease from 5.5 rupees in 2017 to 2 rupees in 2025, the dividend paid to CIFCL promoters has increased steadily from 46 rupees in 2017 to 84 rupees in 2025, almost double. In the normal course, the shareholders, including the promoters of CIFCL, should have earned the same amount of dividend as the promoters of the company by virtue of their investment. Had not CIFCL diverted funds to the tune of 10,262 crore rupees, including 10,134 crore rupees to related companies, the common shareholders must have perhaps earned as much money in dividend as the CIFCL promoters. So would have the investors, including institutional investors. A significant part of the diverted funds, as already explained, line the pockets of the Murugappa Group promoters and their key management personnel. It is not the common shareholders alone who got a short shrift, however, in the process. The diversion of funds also deprived the state exchequer of tax revenue. At least 25% of the profit earned had CIFCL deployed the funds prudentially and honestly. In addition, the state exchequer would have received more tax revenue from individual investors on account of more profit and dividend payouts thereof. According to the information available in public domain, CIFCL has earned 17,643 crore rupees in standalone profits after tax between 2016 to 17 and 2024 to 25. Standalone profit constitutes earnings that a company has made on its own steam, without any contribution from its subsidiaries. Hypothetically speaking, had there been no related party diversions, more than 10,000 crore rupees could have bolstered CIFCL's profit margins substantially. The diversions which took place through related party transactions have caused a substantial loss not only to the common investors but also to the state exchequer. The former in terms of dividend loss and the latter in tax revenue loss. In conclusion, our investigation reveals that the Murugappa Group promoters not only profiteered out of the fund diversion but also collected dividend, thus unjustly enriching themselves. All this at the expense of the lenders, institutional investors, and the common shareholders.